All right, so what's up, y'all? I'm live. AJ Simmons here. I want to go over stock investing, just an introduction to stock investing. This is not about stock trading. This is not about Forex. It's about stock investing. Okay, so if you're interested in getting in stock investing, then this video is for you. Um, Basically, if you don't know the difference between stock trading and stock investing, stock trading is kind of like flipping real estate, and stock investing is kind of like doing rental property for real estate. All right. So, I'm just trying to make sure we got everything straight here. I appreciate y'all for joining me on this. So, I'm gonna go over a couple different things. So, the first thing I'm going to do is I'm just gonna pull up a couple different stocks and help try to explain it to you so you can have an idea of what you're looking at when you trying to look to invest in a stock. All right. Um, let's go to actually let's just go here. All right. So let's pull up a practice stock. So this is my favorite stock to go over. This is my number one stock. This is the local energy company in Virginia, or in my area of Virginia, that we go through, that we pay our light bill to. And I always recommend anybody that if you don't know anything about stocks, usually you can just go to the light bill company that services your area, and that'll pretty much be a good stock to invest in. Okay. Let me see if I can find the comments for this video so I can be able to see your comments. If you got any questions, comments, definitely ask them, and I'm gonna do my best to keep up with them. All right. All right. Now I see what's going on. All right. So if y'all can see my screen, I'm trying to pull up my video on my phone just to make sure y'all can see the screen perfectly, because I don't want it to be any mishaps. It is live. All right. So I don't want it to be any mistakes. If you can see my screen, let me know. All right. I see some comments now. Shout out who's that? Antonio Haskett. Shout out him. Shout out to Coup86. I see. All right, bet. Now, can y'all see the Dominion Energy screen that I have pulled up? If you can't, matter of fact, I don't like you can. So let me go back to this. Let's see if I can fix it. All right, there we go. I think I fixed it. Still getting used to this live stuff, y'all. But anyway, this is stuff I usually share with my mastermind group. Usually I wouldn't do this just freely, but I said, you know what, I'm gonna get them a live webinar just to show them some of the type of stuff that I would do in the mastermind group. And yes, when you get in the mastermind group, it's gonna be just like this, because when it's live, you can't control mistakes and all that. All right, so now y'all can see my screen. Here we go. All right, so first thing first, let me get my comment box, make sure y'all can, so I can see y'all comment. All right. So right here, I got Dominion Energy pulled up. This is a stock, like I said, that I recommend because it's the local energy company where I'm from. And I always recommend, if you don't know anything about stocks, just invest in your local energy company, because it's usually only one. You know what I mean? It ain't like it's a competitor or anything. They can't go out of business because you got to pay them for your lights. So this is Dominion Energy. This is the company in Virginia that we pay. All right. So first thing you need to know is this. What does this green ticker mean that pointing up? What does that mean? And it says 61. What that means is this right here. First of all, this 80, this is how much the share costs. This is how much each share costs for that stock. Okay. So you paying, if you want to buy one share of this stock, this Dominion Energy stock, it's $80. All right. What this NYSE stands for is the New York Stock Exchange. That's where it's traded at, the New York Stock Exchange. All right. And this time and date is basically the close time that they last recorded this trade number right here. $80 per share. Okay. Now this 61.61, that's the 61 cent. That means that so far today, when they closed this stock for the day, closed it for trading, it went up 61 cents. I see Jado. He said, "What's up, AJ? I'm late to this live. What's going on?" You didn't miss nothing. I'm just now getting into it. Okay. I was trying to get everything straight. So you right on time. All right. So this green number right here says that this stock right here closed 61 cents greater than what it opened. Like when it first opened today on the stock market, it says that it opened at 61. It opened 60. I mean, it closed 61 cents higher than what it opened today. All right. And so as you can see, I got 1 day clicked. So when you opened it, when it opened today, it opened at $79.68. Okay. Then it went up, down a little bit, and it closed at $80.16 today. All right. Actually at $80.08, which you can see it trading in now. All right. So that's all you're looking at now. When you're investing, you're thinking long term. When you're trading, you're thinking short term. So if you were a day trader, then obviously you'll be paying attention to this. But what I'm talking about is stock investing long term. Okay. So let's look at 5 years and call that long term. So over a 5-year span, you can see that this stock started at 52, and that's because it had a stock split too. But and a stock split is when they split the stock in half, the share price in half, so that way more people can afford to buy in. All right. But I'll go over this a little more later on as we start to delve a little bit more into stocks, so that way everybody can be familiar. But that's all that is. All right. So 5 years ago, on August 31st, 2012, this stock was trading at $52.16. All right. Now you fast forward 5 years later, it's trading at $80.08. So as you can see, this stock has been trending up. Like you got some low variations going on in there, but for the most part, it's trending up. If you click the max button, this is what I like to look at the most. For any stock I look into, when you're talking about stock investment and you want to pick a company to invest in, I automatically always click the max. And I like to look at where the company started and then just trying to make sure that there's a trending upwards. You know what I mean? As far as the direction that the stock is going long term. As you can see, if you held this stock back in 86 or 87, it took a huge nosedive in 88. And so a lot of people would have panic right there and sold because they say, oh no, the market is crashing, whatever the case may be. And then they'll panic and sell because they don't want to lose all their money. But what you got to do when you're an investor is have the discipline to think long term and trust the company. That's why you hear a guy like Warren Buffett, he says that don't invest in any company that you're not familiar with, that you don't understand. You know what I mean? You want to research the company and understand and see if you believe in the actual company. Don't just invest in companies that because you're looking at numbers and you think it's going to go up or you think it's going to do something. Know what you're investing in and understand why you want to invest in it. I was looking at Chief's Facebook earlier today, and he actually helped to inspire me to do this video. So shout out to him. But he was talking about how he said that the company that he had shared, he said he wanted to invest in it because of the coming president that was coming in. At the time, it was Donald Trump was about to probably get in office. And he was saying that the company, it made sense for that company to go up in value. So he was investing in a company not only because he thought it made financial sense, but also because of the company itself. He said the type of company that it was, it made sense for it to go up based on the actual president. All right. So it's got to be more than just money. But anyway, so you see it took a dive right there, but it kept going up and up and up. All right. So whenever you see this number right here and it's green, that just means that's for that day. Okay. So let's pick another stock. Let's pick another stock so I can give you a better example. Try to find one that's trending downwards. Let's do McDonald's since I searched them earlier. They were up today too. As you can see though, they're trending downwards. It says after hours, this stock is actually going down. And so what the hours are for the stock market, I believe they stop at 4:30. They start at 8:30 Eastern time, I believe. I might be a little off on that time, but I'm pretty sure it might be from 9:30 to 4:30, or it might be 8:30 to 4:30, but either way, it's somewhere around that time, right? So anyway, after hours, since the stock's been traded, it's went down 8%. And so a lot of times people will see this number and see that it's in red and automatically assume, oh, this stock is bad, it's losing money. That doesn't mean anything. All that means is this stock lost money that day, but it's only 0.08%. Okay, so that's not a huge deal. Your stock is going to fluctuate. What we're looking at is long term. Okay, 5-year span, nothing but up. Max, nothing but up. You see what I'm saying? So those are the stocks that you want to find to invest in. So when they tell you that you want to invest in your 401k or your what is it called, your IRA or any type of long-term retirement investment funds, you don't need that as long as you know how to invest yourself, because they're usually going to return lower dividends because they diversify so much and they don't really know what they're doing themselves. So they just try to invest in stuff like the Dow and the S&P 100, 500, and all that type of stuff, NASDAQ. When really, if you just create your own investing portfolio and invest the stocks yourself, you can get a bigger return as long as you know what you're doing. So go down here for a minute. What does this mean? Open 158.89. That means that today, when this stock opened today, it was trading at $158.89. Today, the highest this stock has traded was $159.34. The lowest this stock has traded today was $158.53. All right. Now the market cap, if I remember correctly, the market cap is simply how many invested stock dollars are in this particular company. So we got 125 billion. All right. Now the PE ratio. This is a very important number. The PE ratio is the price to earnings ratio. What that means is whatever the price is for this stock, you divide that by the earning per share. This is the price per share for the stock. Okay. So if you take this number and divide it by the earnings per share, it'll give you this ratio. Remember, a ratio isn't a dollar amount. It's simply just something that you can kind of go off to I guess calculate how low something is. All right. So a 25 PE ratio is very high. All right. Now the dividend yield percentage is basically the percentage that the dividend pays. Okay. So let's go to, because Yahoo Finance has a better one. Let's go here. All right. And that's two, and so there's three types of different stocks that you can invest in, and I'm gonna show y'all that in a minute. You have a dividend stock, which is basically a stock that pays a high dividend. Think of a dividend stock as a rental property. All right. Then you have a growth stock. A growth stock is simply a stock that, think of that like a flip, like you flipping a house, because you buy it low and you're trying to sell it high. Okay. With a dividend stock, you're just going to buy the stock and collect dividends from it. Okay. So that's like collecting rental income from a real estate property. Okay. So same thing. Then you have a dividend and growth stock. A dividend and growth stock means that not only is you're expecting this stock to grow in value, but it's also going to pay you a dividend as well. And so if you look at Dominion, let's look at Dominion. I just checked this one earlier. If you look at Dominion Power, it is a dividend and growth stock because the company is growing. The actual worth of the stock is growing. The company is growing over time, and also it pays a decent dividend. I'm trying to go back to it if my computer load up faster. That's how you can kind of tell. So it's just like rental properties. Like you really want a dividend and growth stock most of the time, because a dividend and growth stock means that not only is this company going to be worth more down the line, and if you were talking about real estate, you're saying that this company is building equity long term, but then it's also paying you a dividend every quarter, just like rental properties will pay you an income every month. Okay. So, and dividends usually are paid per quarter. If it doesn't pay per quarter, then you might find some every now and then pay per month, but usually they pay per quarter. All right. So I like Yahoo Finance, the way that they show the stocks, because they have more details. Okay. So for example, if you were, let's say you were a trader, but you traded, like, you can be a day trader or you can be a little bit more long term. And so say if you traded stocks over a year, if you bought this, if you can look at this stock right here, you can see that within 12 months, the stock usually trades in between $69.51 and $81.65 over a year span. Okay. So if you were trying to trade this stock and use it as a growth stock, you will want to buy this stock somewhere around here, about $69 or lower, and then try to sell it somewhere around here, because that's the trade range that this company usually trades in over the past year. This is over the last 52 weeks, okay? So it could go up, it could go down, it could be different, but usually it's gonna, that means that this is kind of a thing that you can go off to kind of estimate where you should buy and sell at. But if you're talking about investing, you don't plan on selling these stocks anytime soon, all right? All right, now, what else do we got here? Dividend yield, which is what I was talking about. So the dividend yield on this stock is 3.81%. And the actual dividend payout every month, every quarter is $3.02. Okay. And if you own 100 shares of this stock, then you would get 100 times $3.02. Okay. But how do you get 100 shares of the stock? Well, you got to buy 100 shares at $79.45. Okay. Depending on whatever the stock is trading at. All right. This you shouldn't put your money in a savings account, because give me 1 second. You shouldn't put your money in a savings account, because if you just invest your money in stocks, then I'm trying to see what, okay, here we go. If you just invest your money in stocks, then you can probably earn a higher interest rate. For example, the dividend yield on this one, let's just say you only earned that 3.81% on your money. That still beats the 0.02% that your savings account is going to pay you, okay? And it also beats inflation, which is about 3%. All right. I think it's like 3.5% or somewhere around there. But the whole point is you're trying to beat inflation, okay? So another thing about this dividend, so the PE ratio for this stock right here is 22. Now you might say, yeah, that's real high. And it is. I'll tell you now, because I know, because I look at this stock a lot. But then you might pull up a stock like, let's say, Ford, for example. And if the PE ratio for Ford is only 11, and so you might say, oh, well, that stock is not good because the PE ratio is low. But you can't compare companies in different industries, okay? So if you want to compare Ford to somebody, then compare it to somebody like a company like Acura, or the parent company for Acura. I don't know if Acura is actually traded, or if that's a subsidiary of a parent company or not, but just give you an example. So you got to compare companies that are in the same industry, okay? So this could be a high PE ratio or could be low. But the point is, it's two ways to make money off stocks. Number one, growth, and number two, dividends, okay? So again, think of growth as flipping a house. You buy the house for $100,000. Over 2 years, it grows and it's worth $130. You sell that house, and now you just made a $30,000 profit off of the $30,000 in equity that you earned. And actually, it'll be more than 30, because it'll be you're paying off the mortgage on it as well. So, but anyway, then as far as like dividends, look at dividends like rental income. You making a couple $100 every month off the stock, but also while you're making money off the stock, you're hoping that it's growing in value as well, which it should be if they're paying out a dividend. And then you'll be making money from the dividend, and you also can make money from the actual growth of the stock if you sell it. Now, growth from stocks doesn't make you any money until you sell, okay? Just like a lot of people be watching their portfolio and say, oh, I lost $100 today because their stock went down in the value of $100. But technically, you didn't lose anything because you didn't sell anything, all right? So keep that in mind. Oh, I spelled that wrong. All right, let's go. Let's do Google stock for a minute, because I want to show y'all an example of a growth stock. And I know for a fact that Google is a growth stock. Because why I say Google is a growth stock? Because they don't pay a dividend, okay? If you look at the ex-dividend date, the ex-dividend date is the last date that they paid out a dividend. It says NA. Dividend yield says NA. Earnings date says NA, okay? Now, why does it say that? It's because they don't pay out a dividend. So this is a growth stock. And if you look at, let's pull up their graph for a minute. Now, when I'm looking at the graph, I like Google better, but when I'm looking at the details of the stock, oh, wrong one. Y'all about to see my AdSense revenue. But when I look at the details of a stock, I like to look at Yahoo Finance because they give a lot more information. All right, so do Max on Google for a minute. As you can see, over the years, they started at $54, and now they all the way up to trading at $915 per share. Okay, that's just for one share of Google. It costs $915. So this is a growth stock, isn't it? That's excellent growth stock. Okay, they don't pay a dividend, but it's increasing your value. So you also so you can make money two ways from a growth stock. And you really don't make money, but it'll increase your net worth, okay? Because if you bought this stock in 2014 and held it up until now, you just doubled your net worth. Well, not your net worth, but you just doubled what the stock was worth in your portfolio, okay? Because it just went up to 915. So that increases your net worth because the stock went up from the price that you bought it at. So if you bought 1,000 of these shares back in 2015 for $635, now you own it and it's worth $915 a share. You increase your net worth. Okay. Another one is Facebook. Facebook is another one. It doesn't pay a dividend every month or every quarter, I meant, but it's a growth stock. So you're still increasing your net worth because it's growing. And so look at this. This is a great example. You see this minus $1.42 today. You see it's red and it's jumping out at you and making you feel like, oh shit, I'm losing money. It's not that big of a deal. Click on 5-day. Okay, that's still going down. Click on 1 month. Still not that bad, not that good. But as you look over the last 3 months, it actually went up. Okay, so if you keep looking at the short term, if you're a trader, then yes, that's bad. But if you're an investor and you're thinking longer term, that's not bad at all. You just gotta hold the stock and wait for the company to grow. And that's why I always say only invest in stocks that you actually believe in. Okay. So over 1 year, if you invested in this stock at the beginning, over a year ago, you bought it at 124. Now it's worth 166. So you see what I'm saying? So you actually earned money on that. You earned about $40 per share on that one. Okay. You can't do that at any bank account. You can't earn that type of interest at any bank account. Okay. So that's why they say invest in stocks. Okay. Because if you put your money in a savings account, you're earning 0.02%. Sometimes 0.002, you know, something like that. You're not earning anything on your money. You're losing money because the inflation is 3%, 3.5%. So you got to beat that 3.5% in order not to lose your money. And this is for people who got money parked. This is also for people who have a job, don't want to get into entrepreneurship, but they want to grow their money and they want to invest. This is basically helping you understand. Let me look and see if they got any comments. I see Tony said AJ is going to post this later as a video. Yeah, I'm definitely gonna post this as a video later. And the reason why I'm giving this away too, because I don't think I'm some stock guru or some stock expert. I probably I don't know, I probably a good chance I won't sell this information or anything like that, because like I said, I don't feel like I'm an expert in this. Cleaning, I'm an expert in that. Cleaning franchises, cleaning business, I'm an expert in that. That's why I sell that information. For this, I'm giving you what I know. You can take this and you can kind of do something with it. All right. So hopefully y'all were able to get something from it. If you have any questions, definitely post them. I'm about to wrap it up, but this is a good thing to look at. Also, let me go back to show y'all one more thing that you can do. Now, if you have like an E-Trade account or any type of brokerage account, and actually, by the way, so let me explain that. So if you do want to get into stock investing and stock or stock trading too, you have to open a brokerage account, right? And so what a brokerage account is almost like a checking account just for investing in stocks. Okay. And so you can go through a brokerage account, and brokerage firms are like E-Trade. Actually, let me type in brokerage account. Scott Trade, TD Ameritrade, what's it? Charles C. These all you do is type in brokerage account. And so if you're looking for a brokerage account to invest in, just look them up. Fidelity, all these different places, right? Some of them are even local to you. As you can see, I got a few around me that's local as well. It's coming up on Google Maps. All right. So just look them up and see how much they charge per share, like per trade. Because every time you purchase some stock, Every time you sell some stock, they're going to charge you for it. So that's what this fee is right here. So if I was to make a purchase today of 20 shares of a stock, then it's going to cost me however much 20 times the stock is per share, plus $6.95 if I went with this company, right? And so this company might charge $10 per trade. This company might charge $12 per trade. Another company might charge $2 per trade. So just look over and see what the fees are for each brokerage company, and also look at what their terms are and anything else. Just read the fine print, like I always tell y'all for cleaning franchises, and just kind of go with it. You know what I mean? But that's how you start investing in stocks. All you have to do is simply go to any one of these people. I actually use E-Trade. Another good one I use too is Capital One Investing. It used to be Share Builder, but they got bought out by Capital One. So now Capital One is managing that. Let me see if I can find it. Oh, I'm forgetting to put the one. That's why. All right. But yeah, and so you just kind of look around and see who you want to make your investments through. That's all a brokerage firm is. All right. And you can get into it. And once you get up there, you take and you there. So it is still called Share Builder. Okay. So, and all you do is you take and transfer some money from your bank account to this online brokerage account, or like I said, you can find a brokerage account in your area and go through them physically and just kind of start purchasing stock. And that's all you do. And so the stock is the actual company that you're buying from, and a share is the percentage or the actual like what you own. One share. Like again, let's go back here. This is one share, $9.15 per share. If you go back here, this one is $1.16 per share. Okay, so once you buy one share, you essentially own a piece of Facebook. That's how you become an owner of Facebook. Now, the more shares you own of a company, then the more ownership you have of that company. So this, if you bought just one share of this, that makes you a minority owner of Facebook. All right. So it's not hard to get into stock investing. It doesn't have to be complicated. I like to tell you that if you want to invest and you're trying to invest for the long term, invest in companies that you know are promising. Don't go for penny stocks. Don't go for companies that just came around. Go for companies that's strong. Like Facebook, they're fairly new still. If you compare it to a company like Ford or something, they're fairly new. But if you look at them, they're on the rise. I look at them as being stable. And people have to remember that Facebook isn't just a social media platform. It's an actual company that purchases smaller tech companies and stuff too. So I think that Facebook is a good investment. I think that Google is a great investment. I think that Dominion Power is a good one too. But just check them out. Check for yourself. See what you think. Let's just try to see if we can find one that I would consider a bad stock. See, I think Pizza. I forgot who Pizza Hut is owned by. It's owned by Yum Brands. All right. Let's take a look at this one. And again, this is just my opinion. I can't say what's good or bad or anything. I can't say Yum is a bad company or whoever. But I'm just going to trying to see if I can show y'all an example of a company that I might not invest in. Okay. Let's see. So let's click on the max first of all. Let me put it up in Google. It's easier to read. So if you look at it over time, they actually been going up and up and up. Somewhere around 2016, they took a huge dip. Okay, about a $30 dip, okay, so per share. So you might wonder what that was, but if you're a savvy investor, that might have been just a good time to buy because it was lower, right? You want to get it for cheap, and then you see it starting to rise back up again. Now, everybody in the financial industry that I've been following is saying that there's a financial crash that's about to hit sometime soon. They've been saying anywhere between the end of 2016 and somewhere in between now. Okay, it's really supposed to have been happening according to Robert Kiyosaki, but it should be somewhere in between now. All right, so it's supposed to hit soon, so this number might even go down more. Okay, but when you think long term, 10 years. If you buy this stock and you believe in this company, because as you can see, look at their subsidiaries. They own, I hope I'm probably saying that word wrong, but anyway, you got KFC, they own Pizza Hut, they own Taco Bell, they own that company, you know what I mean? So there might be some promise in this company. This might be a good company to invest in if you believe in these brands. If you don't believe in these brands, then don't invest in this company. Okay, so that's just something to look at. But anyway, that's all I wanted to go over. I just want to give y'all a brief introduction to stocks. I'm gonna check out some of the comments and I'm gonna get off of here. If y'all got any comments, definitely drop them. And hopefully this was able to help y'all. I see. Oh yeah, Jado said I see you talking about stock. Yeah, because I realized, I said, you know what, I just try to share as much information that I have as possible. And I forgot that a lot of this stock information that I do have, even though I don't consider myself an expert or anything, it's still stuff that people don't know. So I figured, you know what, let me share what I have about stocks, and hopefully it can help somebody who's looking to get in stock investing. All right. Tony said, AJ, you want to post it later? I already answered that, which I will be posting it later. Jado said, are you doing stock? I do own stock. I was actually a part of a stock investing partnership called Omega Investments, founded in Virginia. If you probably can Google it. But anyway, we got rid of that membership, that partnership at the beginning of this year. We sold all our stock and cashed out just because I moved down here. Then one of our other members was active duty in the military. She got shipped out. And then two of the other members dropped out because they were just having a little bit of trouble keeping up with their monthly payments. Because what we would do was we pooled our money together, and every month we would invest in a certain amount per month, and then take that money and invest it in different stocks. You know what I mean? So, but we cashed out. So I had a nice little check that came in early in the year from it. And so right now I only own one stock, and that's Dominion Power. Okay, because that's one I know for a fact. And so right now, I don't invest in any stocks. I feel like the number one best company that you can invest in over any other company in your whole entire life is the company that you own. Okay, so most of my money goes back into the company that I own. All right, A&A Solutions is my company, and that's what I invest in. No, it's not a publicly traded stock for people who are going to watch this later and thinking I'm bigger than who I am. Right? No, you can't invest in my company yet. It's not a publicly traded stock, but that's the best place to invest your money. If you don't know anything about stock investing, you still don't feel comfortable, invest it in yourself, okay? Invest it in your company that you can control, okay? Because one thing about stocks too is, and this is what another reason why I'm telling you to invest in the companies yourself instead of buying in 401ks and IRAs and all that type of stuff. You have control over this. You can come in and sell this. You can pick and choose which stocks and all of that. When you go get you a IRA through your job, or your 401k through your job, or TSP even through your job, they're going to ask you, well, do you want to invest in aggressive stocks or non-aggressive stocks? Do you want to invest in tech funds or so and so? And they're trying to give you a combination of all these different tech companies or all these different oil companies or all these different, just because they want to diversify because they ain't sure what they're doing. Well, if you know what you're doing, you don't need to invest in every fast food restaurant that's out there. All you need to invest in is the one fast food restaurant that you believe in. You know what I mean? If you want to invest in the tech industry and you believe in Google, then just invest in Google. You don't have to invest in Google, Amazon, Alibaba, and every single one of them. You know what I mean? Just invest in the one that you believe in. Even though, by the way, those last three stocks I just said were all good ones. But you know what I mean? Like, there's no need to diversify if you know what you're doing, and you can have more control over it if you do it yourself. And you'll also have a better return if you do it yourself and you know what you're doing. So that's the key. Robert Kiyosaki says that it's not risky if you know what you're doing. All right. So let's look at some more comments. He said I am in stocks. Tony said, is there any good sources where I can get this information like this? I learned a lot of my information from a guy by the name of James Taylor. He owns the V8CDC. If you can look him up, v8cdc.org. It's a nonprofit company. He teaches people to start stock investing partnerships, and I think he does a couple of courses on stock investing too. That's where I learned the bulk of my information from. I also learned from I signed up for the Rich Dad newsletter. So every now and then they'll send some free webinar courses, and I sign up for all of those, and I sit through those and learn from those. Let me see, YouTube. Look up how to invest like Warren Buffett on YouTube, and you're going to come across I'm trying to think of the name of that channel, man. But there's a good channel on YouTube. If you look up how to invest like Warren Buffett, it's going to be a white guy with glasses on. He's going to be at a chalkboard and writing down and explaining to you how to invest like Warren Buffett. And if you watch all of their videos, that's a great source of information, wealth of knowledge. I wish I could remember the name of it, but that's a good way to just look on YouTube and look for that video. I'll link it in the description and let y'all be able to click on that. Let's see. Tony 8 says, question, do you think investing in stocks is like gambling, or do you think you should wait until you have enough excess capital to invest? So again, I don't think it's gambling if you feel like if you know what you're doing, if you're educated about it. Because I honestly feel like I'll put all of my money, like a company like Dominion Power, my local light bill company, companies in Virginia, they can't go out of business. If they have to go out of business for whatever reason, the government will have to step in and and like wing that thing out of the way, or either find a replacement or something. You know what I mean? So personally, I will put my entire, if I was investing for retirement, but y'all know I don't really believe in retirement. But if I had a retirement account, I would have put my entire retirement account into that one company, just because I know it ain't going nowhere. I know it's going to completely grow. You look at the financials, you look at its history, you know that it's going to grow. So I don't think it's like gambling. However, it depends on where you at with your finances. If you're stable and you're not, like, I feel like, yes, you should invest in stocks. And I'm saying invest. I'm not talking about trading. Okay. Trading is an income producing type of thing. I'm talking about investing, thinking long term. Okay. So just trying to grow your money, somewhere to park your money. Once you start getting large lump sums of money, 10 grand a month, not 10 grand a month, but 10,000 or more in the bank, and you don't know where to keep it because of inflation is going to make that money be worth less in years and not more, that's when you need to start investing in stock. But if you just in the beginning, you don't know what to do,
It's like she's never gonna get it. So I just told myself, no, Gina, don't off.